In today's market update, we're going to be taking a look at the next cycle up in our list of cycles that we monitor in the markets, and that is the 80-day cycle, in particular the future line of demarcation, the FLD for the 80-day cycle. Today is the 15th of July 2019. My name is David Hickson, and I must ask you to please make sure that you have read and understood these disclaimers before we take a look at the markets. So here is the analysis that we've been tracking over the past several weeks in the S&P 500. If you haven't seen the previous market update videos, please make sure that you take a look at those before watching this market update video, because I am doing my best not to repeat myself. So in our previous market update, we were of course expecting price to come down into the 40-day cycle trough. And there is the nest of lows for that 40-day cycle trough. And as you can see, on Tuesday of last week, price came down and formed a low point, which makes it a very possible candidate for that 40-day cycle trough. Now, we are of course looking at two possible analyses in this market, and so let's quickly switch to the other analysis, and you can see the difference in that analysis. As mentioned in our previous market update video, this expected the 40-day cycle trough slightly later, so early this week as opposed to late last week. However, you can see that the actual circle for the 40-day cycle trough was over here, which I think was on about Thursday of last week, between Thursday and Friday of last week. That's when the 40-day cycle trough was really expected. One of the things you have to be careful of with Hurst Cycles is that, of course, time keeps passing, and it can take you quite a long time to sort of grasp the content of an analysis, and then it's quite easy to focus on what you're expecting and keep focusing on it until the time has passed and that thing has happened. So you need to always stay on your toes in terms of troughs coming in. And so on Tuesday, that trough came in slightly earlier than we were expecting in either of our two analyses. Although if I switch back to the other one, I think you will see that it is pretty much happening on cue for this nest of lows over here at the foot of the chart. So that's a very likely candidate for the 40-day cycle trough to form. And I received many emails last week saying, has the 40-day cycle trough come in? Is that it? Is that the end of the story in terms of the 40-day cycle trough forming? Of course, the correct answer is we don't actually know with absolute certainty whether that is the 40-day cycle trough. And it's not important that we know with absolute certainty, because what is important is that we work with our expectations. The fact that we are expecting a 40-day cycle trough and then a trough does form in the market is what we need to work with. You cannot, when you're working with Hurst Cycles, wait for certainty. If you're waiting for the diamonds to form at the foot of your chart, these nice diamonds that give you complete confidence in terms of when a trough has formed, then of course you've missed the formation of that trough, because those diamonds are only placed there by the software or by you if you're performing your analysis by hand, only placed there when you are absolutely certain that the trough did form there. And by the time you're certain, it's too late. So we were expecting a 40-day cycle trough to form, and indeed a trough did form on Tuesday, and it's a very likely candidate. So let's speak for a moment about that trough, because it didn't come down very low. And of course, it is still possible that that 40-day cycle trough lies ahead of us. But let's discuss it for the moment as if we are accepting that this is the 40-day cycle trough. Now, I ended the previous market update video by mentioning that if the 40-day cycle trough does not form at the level of this blue FLD line, which is the 40-day cycle FLD line, then that would indicate that the bullishness in the market is still alive. And this is a very important concept. I've mentioned it in every market update video that we've done in the past several weeks, the concept that the underlying tone of this market is bullish. We've seen it time and time again. Here with regard to the 20-day FLD, this purple line. As you know, this is the B category interaction that we spoke about. Price did not come down to the 20-day FLD. Usually you would expect it to find support at the level of the 20-day FLD. The fact that it didn't quite reach down to that 20-day FLD, whether the trough was over here on the 18th or whether it was over here on the 26th, I think that was, doesn't really matter. The fact is price did not come down to the 20-day FLD. The fact that it didn't make it all the way down indicated that the bullishness that we've been discussing in the market is still alive and well. And as I mentioned in our previous market update video, we could expect the same thing to happen with the 40-day cycle FLD, because the 40-day cycle trough would have been expected to form at about the level of this 40-day FLD. But the fact that the trough has potentially formed above that FLD simply tells us that the bullishness in the market that we are tracking is still alive and well. You know, of course, that we are expecting a fairly big peak to form, and we are likely to see a shift in the market fairly soon, but that shift has not occurred yet. And as long as we're trading a bullish market, we need to not anticipate the bearishness happening. We're beginning to see a few cracks, but that's mostly in other markets. Focusing just on the S&P 500, there hasn't really been much evidence of any bearish cracks appearing yet, and so this is still a bullish market. And so that 40-day cycle trough was not really a surprise, because we have a bullish market and price didn't even get down below the 20-day FLD, the purple line, which it was expected to do, and it formed the 40-day cycle trough, if that is what it was, higher than the 40-day FLD. So you might be asking yourself, well, if we have this uncertainty about the 40-day cycle trough, how can we make confident trading decisions? And we can do that even despite the fact that there is uncertainty, if we are tracking the way in which price interacts with the 20-day FLD. And let me explain to you how we can do that. So let's focus for now on the 20-day FLD. Well, actually, I'll leave them both up on the chart because we're going to be referring to both of them. So you know that we have a sequence of interactions. The first interaction between price and the 20-day FLD, that purple line, following a trough of at least 20-week magnitude, is the A category interaction. We expect price to come up and achieve its target, which it did, and then come down to the B category interaction, which is a move back down towards the FLD. The move away from the FLD is the C category interaction. We then expect price to come down and cross below the 20-day FLD in a D category interaction on its way down to forming the 40-day cycle trough. But because we have bullishness in this market, the cycles couldn't even push price down below that 20-day FLD. So we don't sit around and wait patiently for that interaction to occur. If the 40-day cycle trough has formed, and we are making that assumption at the moment, then the next interaction between price and the 20-day FLD is the E category interaction, where price moves away from that FLD. So tracking the sequence of interactions between price and the FLD, we have a sequence going all the way from A to E. The next event, or the next interaction between price and the 20-day FLD, is of course an F category interaction, when price will move up, form a peak somewhere up there, and I spoke about some targets in our previous market update video for the 80-day cycle, but then price will turn down and cross down below the 20-day FLD in an F category interaction. Now, F category short trades are usually good, profitable trades. We need to bear in mind that there is still bullishness in this market, and the fact that the D category interaction didn't even get below the 20-day FLD is a bit of a warning sign if you're considering taking a short trade. Under conditions where a market is constantly bullish like this, an F category trade will often still be a profitable short trade, but it is sometimes a short trade you need to be quite careful about getting into and out of quickly, because the market might not have developed that much bearishness to really carry it down to that 80-day cycle trough. So if the 40-day cycle trough has formed on Tuesday of last week, then our next interaction would be an F category trade, which gives us a short trading opportunity. What if that 40-day cycle trough has not yet formed? What is going to happen next? Well, if the 40-day cycle trough has not yet formed, then we will still have, of course, our A category interaction over here, our B category somewhere there, our C category there, and we are still going to see the D category coming down below the 20-day FLD to form the trough at the level of the 40-day FLD. So that might seem like two very different potential trading opportunities to you. Because of the way in which Hurst Cycles influence financial markets, and because of the fact that we can never know with absolute 100% certainty exactly where we stand in terms of our analysis, it is simply impossible. We have to work with the probabilities and what seems likely. And so this is a possibility. It's a lower probability possibility, if you see what I mean, but indeed this is still possible. But you can see that in fact the trading opportunity is still effectively the same, because as I mentioned, if it was an F category trading opportunity, we would be looking at a short trade, bearing in mind, of course, the bullishness of the market. If the D category interaction is indeed still ahead of us, then we still do have a short trading opportunity. The problem is that it's not quite such a good trading opportunity, because if it's only a D category trading opportunity, that would bring price down to the later 40-day cycle trough, assuming that that 40-day cycle trough is still going to form in the market. And that trough should form at about the level of the 40-day FLD. And so this would be a less profitable trading opportunity, but it is still a trading opportunity. So what do I do in this kind of situation? What you do must obviously depend upon your trading style and how aggressively you like to trade, how quickly you want to get into and out of the market. This is what I do. We have either a D category or an F category short trading opportunity. An F category opportunity, which is the most probable scenario in my opinion, is a good short trading opportunity. So I would be interested in going short, obviously only once the market has formed its peak and has turned around and is coming down again. So I'm looking ahead here. I'm not speaking about, if this happens today or tomorrow. The market would need to come up and form a bit of a peak before it turns down. And so I would enter into a short trade. But as price comes down and crosses below the 20-day FLD, I would watch that trade very carefully. And if the market finds support at the level of the 40-day FLD, I would either close the trade prematurely or set my stop loss to get me out at a break-even point, because clearly there is still a chance that that's only a D category opportunity. I hope that makes sense to you. If you have any questions, don't hesitate to ask them, please, in the comments. But let's step back a little bit. We've been looking at the 20-day FLD and the 40-day FLD, and so let's step back and take a look at the 80-day FLD. And let's zoom out here so that we can see exactly what's happening between price and this 80-day FLD. Now, this process of stepping back from one cycle to the next is a process that you are constantly doing as a Hurst Cycles analyst or trader. This particular series of market update videos, I focused on the formation, as you know, of the 20-week cycle trough, which was over here. We anticipated the formation of that 20-week cycle trough, and we tracked the way in which price came out of that 20-week cycle trough by looking at the shorter cycle FLDs. As the price action develops, you'll find yourself constantly taking a step back to reassess where you are and what is happening between price and all the different cycle FLDs. So let's do that with this 80-day cycle FLD. And so we're going all the way back to Christmas Eve of last year, where, according to this analysis, a trough of at least 40-week magnitude formed. Now, you know that I've been speaking about that as a trough of 18-month magnitude, and I'm not going to spend too much time talking about this because I speak about it in many of my market updates. The important point is not exactly which cycle is that. It's your level of confidence in that cycle trough. My level of confidence is at the 18-month level. This is an analysis which marks that as being a trough of only 40-week magnitude, but that doesn't really make any difference to our assessment of what is happening. It has some subtle differences in the analysis, and I pointed out the slightly different position of the 80-day cycle FLD in the previous market update video, and many of you replied correctly that the reason why that 80-day cycle FLD is in a different position on the two charts is because at the 80-day cycle level in the analysis there are some differences. That is the correct answer, of course. But let's take a look at the interaction between price and this 80-day FLD. And the interaction that we get is exactly the same sequence of interactions that we see in the other FLDs that we've spoken about. That is following a trough of at least 40-week magnitude. It must be a trough that is of at least 2 degrees. In other words, there must be 2 cycles longer than the cycle whose FLD you are looking at in the trough from which you start identifying your categories. So this is a 40-week cycle trough at least. I believe it's probably an 18-month cycle trough, but it is at least a 40-week cycle trough. So our first interaction was this interaction over here, which is, of course, our A category interaction. And that's a slightly messy interaction between price and the FLD. You'll find as we start looking at the longer FLDs, the interactions do get messier because it takes more effort for price to get through that FLD. But the approximate level at which price crossed that FLD was about 26.50, and this low point at which the trough occurred was 23.39. So that A category interaction between price and the 80-day FLD projected a target of 29.61. That target was very nearly achieved on this day over here, which has a high price of 29.60. So it turned out to be a really very accurate target, very nearly achieved, just missed by 1 point. So that was our A category interaction. And then, of course, our next interaction, let's label that A, our next interaction is when price comes down towards the FLD at around about the time of the 80-day cycle trough, and that is our B category interaction. Now, you know by now that a B category interaction is when price is expected to find support at the level of the FLD. What happened over here? Well, price didn't even reach the FLD, and by now you know very well what that means. It indicates the underlying bullishness in this market. The fact that price couldn't get down to that FLD for its B category interaction indicates that there is a good degree of bullishness, and in fact you can measure the number of points, and you could, if you like, you could specify the bullishness in terms of how far price was above the FLD. Nevertheless, our next interaction was the C category interaction. As price moved away from the FLD and came up to reach its peak over here. The next interaction is the D category interaction, when price drops down below the FLD on its way down to the next longer cycle trough, which is the 20-week cycle trough. Let's zoom in a little bit and take a look at that interaction. So when price crosses down below the FLD, you can calculate a target. This level was 29.60. And here we have an interesting interaction between price and the 80-day FLD, because you can see that price crosses down below the FLD on this bar over here. But then what happens is something that you will often see happening in the market. The price, having crossed down below the FLD, comes back to the FLD and struggles to get back up above it. That's the kind of thing that you will see happening time and time again. What you will often find is that the median price doesn't manage to get back up above the FLD, so it doesn't qualify as a cross. Let me actually demonstrate that to you, because we can display the median price on this chart. There you can see the median price crossing down below the FLD and then coming back up and not quite touching that FLD. That's the kind of behavior that you will see time and time again. So let's mark here the price level at which the cross actually happened. So the price crossed down below the FLD over here, and that was a level of 28.46, and that generated a downward target of 27.32. Price dropped 4 points below that target as it formed the 20-week cycle trough on the 3rd of June, and it dropped down to a level of 27.28. And so that was the D category interaction. As price dropped down below the FLD to form the 20-week cycle trough. The E category interaction was this interaction over here, where price crosses up above the 80-day FLD and heads up towards its target. Now, the targets I mentioned in our previous market update video, and as you know, we have two different analyses at this level, and the one analysis, let me just zoom out, the one analysis gave us a target of 30.50, and so that's about over there, and the other one gave us a target of 30.90. So we've got two targets there. Which target is the correct one? We don't know yet, because we don't know exactly what the current wavelength of that 80-day cycle is, because it's impossible to know exactly what the current wavelength is. We can look back into the past and we can see the historical wavelength of the 80-day cycle, and we can make our best estimate at what the current wavelength is, but we cannot know with certainty until price actually forms the next 80-day cycle trough. So just a quick reminder, that's our A category interaction, B category, C category, D and E, and our next interaction between price and the 80-day FLD is of course expected to be the F category interaction as price comes down to form this 80-day cycle trough. So the reason why I believe it's very interesting to look now at the 80-day cycle FLD is because what is happening is the price is now coming up to form the peak of the current 80-day cycle. And as I mentioned, it's going to turn down in probably a category F interaction with the 20-day cycle FLD, and it's going to start working its way downwards. So for price to work its way downwards into the next 80-day cycle trough, expected sometime in August, we are going to start expecting to see some bearishness coming into this market. Remember to be careful when you're trading. The bearishness has not appeared yet. And for some of you, if you prefer to be more cautious, you might want to wait until the bearishness has started to show itself, and only then actually enter into your trades. If you're a more aggressive trader, you might want to start jumping into some of these short trades, even though it might be a little bit premature. I hope that you found this market update interesting and useful. Please let me know if you have any questions in the comments or send us an email, and I look forward to hearing from you.